Hello, everybody, and welcome to our next NAP. NAP stands for Nonprofit Auditor Points, and I'm Irina Ryshkova, your nonprofit auditor. Let's talk about capital campaigns today. A lot of my clients asking about capital campaigns because the nonprofits typically do not conduct them often. And there's a lot of questions involved around capital campaigns, how to properly record them, what does it mean, are they restricted by nature, what nonprofits needs to know before they start capital campaign. Let's do it. Okay, so why nonprofits do capital campaigns? And what is capital campaigns? Capital campaigns are typically time limited fundraising effort, but it's longer than regular fundraising event. Now, some nonprofits can do event associated with campaign to bring the word out, but campaign typically can be like for 6 months, year, couple years. And the main goal for capital campaign to raise significant amount of funds for some big specific long-term project. Typically, nonprofits have capital campaigns when they have goal to purchase the building or do renovation of the existing building or create some improve endowment funds. They have some reserved and they want to make endowment fund bigger, so they will announce capital campaign. Or maybe nonprofits want to buy major equipment, right? Maybe vehicle, some trucks. And so typically capital campaign are larger in scale and involved a lot of pledges. So what nonprofits typically do, the capital campaign could be done in two stages. First stage, where the nonprofit connect with their large donors to bring to their attention that they are planning to do that. For example, nonprofits wants to buy a building and they know their main supporters to tell them, hey, we want to buy this building and we need $5 million. So we are starting this phase of asking donors to contribute to our goal to purchase the building. So that's just quiet phase, and then nonprofit moves to the public phase, they announce it. Why do they do that typically in two stages? Because they want to bring on board large supporters so they can easier attract general public. It's much easier for small donors or general public to contribute money to the project just as a matching or additions if they already know that large donors already gave a couple $1 million. Now there's only $3 million left to collect. So then general public will be much more willing to donate to the project. So when nonprofit starts a capital campaign, it needs to be identified specifically what is for, what the goal, and what is the target amount. So nonprofit need to know, for example, we want to purchase the building and it's about $5 million. So they need to understand their target dollar amount and what they want to do, right? And they have to come up with their plan, how they're gonna achieve that campaign, achieve that goal, and how long campaign gonna run. You cannot have a capital campaign very long time because then it's not stop being a capital campaign, right? So it needs to be some, probably I have not seen capital campaign longer than a couple of years. Also, capital campaigns are good because they also indicate very often to the major donors and overall supporters that nonprofit is planning to grow and involved in a larger projects. They actually, they planning to do something larger scale in the community. So overall, it's great for the donors, for the supporters, and overall for your public image of your nonprofit organization. Because public capital campaign, they're purpose driven, as we identified, either purchase a large piece of equipment, machinery, building, land. So every funds that donated towards public capital campaign will be restricted for that purpose. And that restriction cannot be released unless the donors say, you know what, you can spend money for whatever you want. So if your nonprofit invites donors, contribute to capital campaign, and nonprofit identifies that it's capital campaign for the capital improvement for our existing building, and the donations are coming, these donations are restricted, even though that donor specifically did not say, oh, it's restricted for capital campaign, but the donor responding to your announcement of capital campaign and the donor saying this is for capital campaign. So that's restricted funds. A lot of time when nonprofit announces capital campaign, there is large donations and larger volume of donations are coming. And sometimes it puts a lot of pressure on nonprofits to keep track of those donations. And as we know, FASB for nonprofits requires an accrual method of accounting to recognize unconditional donations when they are promised, not when the funds are collected. Because typically amounts are large and substantial, nonprofits need to be very careful to set up a proper policy and procedures how the promised donations will be tracked. Again, because they're not going to be related to when cash is received. What we find out typically that donors communicate with program directors, with executive directors, not necessarily with the accounting department, about their promises. And they unconditionally promise funds. So very critically, that management set up a system, schedule somehow, where they list every promise, unconditional promise that was made, and list of those promises needs to be recorded as revenue when they're unconditionally promised at the on accrual method of accounting, not when the cash arrives, and also they need to be recorded as restricted donations. Ideally, also, nonprofits can set up a separate bank account or separate fund where all these funds are preserved for that purpose. For example, if it's a long-term campaign where nonprofit thinking to raise funds to buy building, it needs to be separated. This $5 million needs to be separated, tracked as restricted for purchasing a building, and eventually on your financials, it needs to be showed as a restricted cash for long-term purpose, not available for operating activities, right? And so the funders can see that their funds are preserved correctly. I receive a question that if nonprofit announced capital campaign during the event and they say we need to raise money for our major remodeling of our building, please donate, and the people donate specifically for that announced purpose, this is restricted funds. It needs to be clearly identified and preserved. So to conclude, capital campaigns are wonderful and very helpful for nonprofit to show the community that they are planning to expand, they're doing some larger projects, and they have intent to grow. However, capital campaigns can put a lot of strain on the nonprofit operation and accounting, because capital campaign donations needs to be properly tracked, understood, recorded as restricted because they restrict for that specific purpose. Some capital campaign donations come with matching conditions, meaning it's not unconditional promise. It's only become promise if condition is met. And matching is one of the most common ones, when donor give $50,000 if another $50,000 will be raised. So if that goal is met, donation becomes unconditional. So therefore, nonprofits needs to be aware and understand what is a conditional promise, unconditional promise, keep it as restricted donation for that purpose, keep them separately from operating cash, keep the track of all promises that have not been paid yet and collect on those. And once capital campaign is closed, it needs to be announced. And whatever was done, ideally, if it's a major improvement on the building or purchasing the building or purchasing the land, it needs to be communicated to donors saying, thank you so much for the support. We've done it all together. That would be successful capital campaign done by a nonprofit. Thank you so much. My name is Irina Ryzhkova. Please visit my YouTube channel for more videos for nonprofit organizations. Have a wonderful day.